Holding back on any big policy move, the European Central Bank kept much of its remaining powder dry on Thursday. It's already gobbling up bonds at a record pace, just weeks after unveiling its biggest stimulus scheme to date. The central bank said it would buy €1.1 trillion of debt this year. It's kept the door open to even more as the Eurozone economy is shrinking faster than already bleak expectations. The bank will lower interest rates on its long-term loans for banks to as little as -1% and will also launch a new loan scheme. Following the policy meeting, ECB Chief Christine Lagarde said she expects the bank to remain in crisis-fighting mode until into 2021 to combat the unprecedented decline.
The Governing Council, and we discussed that over the last 2 days, is more determined than ever to strengthen its commitment to ensure supportive financial conditions across all sectors and countries so that they can absorb this unprecedented shock that we are experiencing.
With much of Europe locked down indefinitely, the 19-country currency bloc's economy could shrink by 10% this year. Governments are borrowing record amounts to keep firms afloat until restrictions are lifted. The ECB is unlikely to stay on the sidelines for long, as it's on track to exhaust its current bond purchase quota by autumn, and jittery financial markets are demanding a further show of commitment. Pressure may now turn to Europe's political leaders, who have so far fumbled a fiscal response. That's left the ECB in a familiar role as the currency union's chief crisis fighter.